without further ado, our economic journey begins in Africa. So I'd like to invite our first speaker, Professor Joseph Nana, who currently serves as the Chief Economist of the Development Bank of Nigeria, who is also the newest member of the Montreal group. Joseph heads the Research, Monitoring, and Evaluation and Sustainability units in the bank. So Joseph, welcome. The floor is yours for the next 5 minutes.
We will display the presentation. Thanks.
Slide, please. So, broadly speaking, the economic outlook for Nigeria right now seems to be relatively bleak. The GDP in Nigeria has actually declined to negative 6.1% growth in Q2 of 2020. Unemployment actually rose to 27.1% in Q2 of 2020 as well, from the last time it was reported in 2018 Q3 at 23.1%. In terms of the oil outlook, we have seen prolonged weakness in the oil price, which has obviously translated further pressure in the exchange rate market. Businesses are currently facing difficulty in securing materials, leading to a sharp rise in purchasing costs, with companies passing those costs in form of higher output prices to the final consumers. Nigerians are being pushed into poverty as prices for goods are getting higher. Please, next slide. So the real sector, the PMI, that's Purchasing Managers Index, Manufacturing and Non-Manufacturing Index, has declined dramatically since April, 5 months in a row for manufacturing, while 6 months in a row for non-manufacturing PMI. What we've seen here is with the lockdown hitting in March, April had no data available. But since May, we've seen a decline. The growth marker is 50 index points. But since then, it's been below 60 index points since then. Next slide, please. This map, rather, shows a very daunting look at the economy of Nigeria. Inflation rising, capital importation declining, interest rates declining. Public debt, of course, has increased dramatically. By and large, we see the outlook seems rather daunting. Exchange rate has remained stable after the Apex Bank had adjusted it to 380 to a dollar. The parallel market has remained stable, relatively speaking, of course, at 455 naira to a dollar. Next slide, please. Now, here's the crux of the matter. Main challenges faced by MSMEs, we've seen that there's low accessibility to loans from financial institutions, insufficient capital, low power supply, indiscriminate tax levies, inability to keep proper financial records, policy inconsistencies, and of course, insecurity. Now, if I may say this though, the COVID-19 pandemic has hit Nigeria relatively weak though, because we haven't seen an upsurge in infections. However, what we have seen though is due to the lockdown, the economy has come to a grounding halt. But since the easing and opening up of it, we've seen businesses try to pick up where they left off. However, if you go to the next slide, we've seen the government of Nigeria has actively responded in kind with a clear, concise economic sustainability plan. Now, what this plan sets out to do is provide a stimulus package to the tune of 2.3 trillion naira, which is basically geared towards mass agricultural programs, extensive public works, road construction programs. Of course, let's not forget mass housing and so on. Next slide, please. For the DBN, of course, what we have actually done is provide moratorium on principal and interest for loans to our participating financial institutions for up to 6 months. Also, we've provided 100 million naira grant to the federal government to cushion the effects of the health crisis. And last but certainly not least, we've increased capacity building for MSMEs and developed long-term products, that's our long-term finance products, to essentially provide longer-term financing to the end beneficiaries. But in the end, we are certain that we'll come out of this strong, and the response that DBN and development banks across the world are doing is to enable MSMEs to get back to work and ultimately cushion the effects of the crisis. Thank you.
Thank you, Joseph. Very clear and very precise as well. So Let's remain in Africa, and I suggest we travel north to Morocco, more specifically Casablanca. So I want to welcome Abdelmoumen. He's a head of strategy and cooperation at Caisse Centrale de Garantie. Abdel has over 18 years of professional experience in the public and private sectors, and he's currently in charge of guarantee and financing product design, strategic planning, special projects, and international cooperation. So Abdel, over to you.
Thank you, Michel. So about Morocco, so the economic outlook is not very good for this year. First, because we have the COVID crisis, which was faced by some very severe government actions like general lockdown, suspension of international travel and flights, and internal travel restrictions, in addition to some restrictions for businesses still in effect until now, because we are still facing an increasing number of daily cases. So also, in addition to the COVID crisis, Morocco has also some structural deficiencies in terms of economy, because we are heavily dependent on tourism, remittances from Moroccan living abroad in countries also affected by the COVID-19. Exports and FDIs are also some major sources of foreign currency and also for growth. In addition to this year, we had not favorable agricultural output, because we had some rainfall less than expected. But fortunately, Morocco is not importer of all food needs. For example, we have partially able to secure our needs due to some strong agricultural sector. But this year, we expect that Morocco will face the worst crisis since the 90s. So the GDP is expected to shrink about minus 6% in annual rate, compared to a growth of 2.5 a year earlier. Also, the budget deficit and the treasury debt are expected to worsen. Yes, next year we are still expecting to partially reduce the impact of the COVID-19, but the full recovery is not expected until 2020. Yes, next slide, please. So, in order to cope with this crisis, so a crisis response team composed of the banking sector, Ministry of Finance, Ministry of Interior, Ministry of Public Health, and also the public and private sector key players and associations, was established to develop answers, both at the national scale and also regional and local scale. So many measures were introduced, like moratoriums on debt, on loans, lower interest emergency loans, grants for households impacted by the crisis, like taxi drivers and independent workers, for example, and also special guarantees that was deployed by our institution, with guarantees up to 95% for very small companies. And for example, this year our activity in terms of guarantee is about 4 times the general level of ordinary year. So that gives an idea about how the demand was strong. So about our perspectives, so next year we are expecting a growth of about 5%, a deficit of 6.5%. But to achieve that, we have some ambitious budget decisions, like injecting about $23 billion in investments, especially led by public sector, the reduction of unnecessary public sector expenses, boosting expenses linked to social security, healthcare, and education, with the national program expected to make, for example, health care insurance mandatory for all the population. and also boosting entrepreneurship and SMEs in addition to startups by increasing guarantee and funding offers and outputs. Yes, next, yes. So, nevertheless, we are still trying to overcome some major problems and deficiencies at the level of our Moroccan SMEs. Regardless of the crisis, we have some we are still facing some major challenges, but that were maybe aggravated by the situation. So the main challenges that SMEs need to address is, for example, we have a high proportion of informal sector, especially when we talk about micro and very small enterprises, which excludes them from access to finance and other services. Also, the available funding is not very well suited for startups and micro enterprises in terms of costs and on the solutions themselves. We have a major problem, which is the payment delays mainly from big companies towards their SME suppliers. And also, SMEs are still less attractive for highly skilled workforce, and also they are not well equipped to introduce some modernization projects like digitalization and also some sustainable development practice like the green economy, social responsibility, new modern governance practices, and so on. So these problems are still being worked on, and Morocco is working on a new Small Business Act that could be adopted in the next few years in order to accelerate the development process of Moroccan SMEs. Thank you.
Thank you, Adel. Adel, merci. We're now moving east to Asia. In fact, we're going to Tokyo. Mr. Hikaru Fukanuma, special guest from the Japan Finance Corporation. Hikaru, thank you for accepting our invitation at such a late time in the day. It's almost 11 o'clock at night. Hikaru is Chief Research Fellow at Research Institute of JFC. He specializes in management and finance of SMEs and business startups. He's also responsible for several research projects on SMEs. So, Hikaru, over to you.
Thank you, Chairman. I'm Hikaru Fukanuma, the Chief Research Fellow at the Japan Finance Corporation. I'm going to explain about economy of Japan and SMEs under COVID-19. And COVID-19, the first wave came to Japan mid-April. Government announced the state of emergency and asked people to quarantine. And the state of emergency was cancelled in May. Then Go to Travel campaign by the government started in July. It's a kind of subsidy for hotel stay. But COVID-19 second wave came mid-August. But the wave is going down, and again, government started next Go to Eat campaign started in October. It's a subsidy for payment at restaurant. Currently, pandemic is not so severe in Japan, fortunately. New infection about 500 per day, and the number of deaths less than 10. Next please. Okay. Under the pandemic, people stopped going out. Many companies started working remotely, including JFC. And tourism and business trip stopped from to abroad and within Japan. And sales of restaurants, retail shops, hotel, transportation, etc. decreased, and income of people in such industries also decreased, and some are laid off. 28% GDP lost in the second quarter. But government started a number of support measures for businesses and individuals, such like Go to Travel campaign or Go to Eat campaign. JFC, as a government finance institution, made special loans for about 800,000 SMEs. That is over 25% SMEs in Japan. We put a lot of people from headquarters to branch offices. And this is the largest disaster recovery loan in JFC's history, double of the one for the 2011 earthquake. Okay, next, please. And next slide, please. Okay, some indicators shows recovering of businesses and consumer sentiment. But economy is certainly recovering, but it is not still enough. Demand for SMEs and income of SMEs have not recovered yet. SMEs need to maintain jobs of employees and, of course, entrepreneurs themselves. SME cash demand, but SME cash demand has peaked out because a new special loan by JFC decreased. The biggest problem is the uncertainty future. Will the third wave come? When will the economy and mood of the consumers recover? Or when will tourism from overseas and within Japan recover? These are the challenges faced by SMEs in Japan. And we are hoping to host the Tokyo Olympics and Paralympics in the next year. Thank you very much.
Thank you very much, Mr. Funakuma. And I must say, quite impressive numbers, 500 cases a day compared to what we're seeing in other countries. So we'll now travel from Asia to Europe, and we'll hear the perspective of 4 colleagues from France, Belgium, Finland, and the UK. And we'll begin with Baptiste Tornari from BPI France. Baptiste has been the head of evaluation and macroeconomic research at the Evaluation, Economic and Prospective Studies Department of BPI France since 2013. He has previously worked as an economist at the French Treasury on macro forecasting and financial sector analysis. So Baptiste, over to you.
Thank you, Michel. Hello, everyone. So I will give you a brief overview of the French economic outlook. Well, the big news you already have heard probably in France is that we're facing over the past weeks a sharp increase in new positive cases of coronavirus. And in front of this second wave of the epidemic, the government was led once again to take new stringent measures with an economic impact to try to curb the dynamics of the epidemic. So far, the new measures consist in a curfew for the next 6 weeks. So they are very targeted measures so far with a direct impact on very specific sectors, the hospitality sectors, for example, cultural activities, and a few others. So we are nowhere near the type of measure we had during spring with the global lockdown, but still it will derail certainly the scenario we could have until September of a continued recovery. And we now expect a decrease of French GDP in the last quarter, given the new measure of approximately 1%. And of course, it could be a bit bigger if the situation leads us to take new and more stringent measures. So what can come next? It's very difficult to tell, of course. We are once again in epidemics, not really in economics anymore. And so we cannot really rule out any scenario for the coming quarters. So in this context, the situation is particularly tricky for SMEs. Of course, the first goal, next slide, please. Of course, the first goal for SMEs since the beginning of the crisis has been to manage the short term, that is to say, to ensure survival in front of the loss of revenue stream. They have been helped by very important measures by the government since the beginning of the crisis, and especially a very large state guarantee loan program, which has been quite successful and benefited to more than 500,000 of French SMEs since the beginning of the crisis. The consequence of this has been paradoxically a decrease in business failures so far this year in 2020 compared to last year, at the expense, of course, of a sharp increase in corporate debt, in SMEs. Of course, we expect this situation to gradually reverse in the coming quarters, as this new debt will have to be repaid, and it will be, of course, especially difficult for sectors who are once again under new restrictive measures who will limit for the coming weeks their economic activity. Even absent new restriction, this new wave of uncertainty brings by the second wave of the epidemic, and also weakened balance sheet by this first very difficult semester will certainly slow the recovery for the rest of SMEs. So far, SMEs in France have quite naturally held back on job creation and investment. That's what we can see in our SME survey here at BPI France, what you can see on the chart on this slide, obviously with this short-term goal of survival in mind. On the other hand, the crisis poses also long-term challenges to SMEs, especially to ensure more resilience in the coming quarters. For example, we can think of the adaptation of processes to what could be long-lasting epidemic threats through, for example, digitalization, adaptation to what also could be long-lasting shifts in consumer behavior, with the need maybe to adapt product and services. So far we have very few insights on how SMEs here perceive these more long-term issues and expect to tackle them. We have an ongoing research here at BPI France. We'll be happy to share in the coming weeks for the group. But no doubt there will be the need of a very diversified toolbox of financing solutions to help SMEs address all these challenges in the coming quarters, the short-term one as well as the long-term one. Thank you.
Merci, Baptiste. A great presentation. So just before we move to the next speaker, I just want to remind the audience, you have the ability to ask questions clicking on the Q&A button at the bottom right of your screen. So please send your questions and we'll use them for the Q&A session. I would now like to invite Pierre Léonard, Chief Economist of Sowalfin from Belgium. Pierre is Director of the Private Equity Department of Sowalfin Group. He coordinates the 9 Invest in Wallonia, which is a mixed capital investment companies acting as local financial partners for SMEs seeking risk capital and equity financing. Merci, and thank you again, Pierre, for joining us today.
Merci, Michel. Thank you. Good morning. First of all, a few words about the health situation, the causes of this economic crisis. As you can see, the situation is not good in Belgium. The health crisis has resumed, and many measures have been taken recently, like curfew, closing of HoReCa, or home working. The indicators of hospitalized patients and those in intensive care units are at very high level, justifying these latest measurements. Now, the situation in some hospitals is now worse than in March. And so the balance between preserving the health of citizens and the functioning of the economy is a great dilemma. Next slide, please. You can see a few main economic indicators. These economic indicators are still negative despite a slight improvement. Indeed, the loss of GDP was estimated at 10.6% in June. Now this indicator is at minus 7.4%. You can note that these figures are before the last sanitary measure, and unfortunately, we can fear that the situation will be even more serious for companies by the end of the year. We can note the importance of the resources that the Walloon government has already mobilized in aid for companies which have had to stop their activity or which have been impacted by the slowdown in the economy. So Sowalfin also plays an important role in supporting the liquidity and solvency of companies. You can see the significant resources across Wallonia which have been granted to companies. Next slide, please. What about the challenges for SMEs? Growth prospects in 2021 are diminishing. A lack of demand is globally the main problem right now. Or we can find a sufficient level of demand to consider a recovery that will allow us to resume growth that we hope will be sustained. Confidence is essential. She's shaken now for a lack of prospect. The way out of this health and economic crisis will only be possible when it is possible to prevent infection with a vaccine or even with new drugs. That's all for me. Thank you.
Merci, Pierre. So now is the time to move closer to the North Pole. So we'll move with Timo Lindholm from Finnvera in Finland. Timo has held the position of chief economist at Finnvera since 2019. Before that, he worked as a senior specialist at the Ministry of Economic Affairs and Employment in Finland. So Timo, over to you.
Thank you, Michel, and hello, everybody. I will start with two graphs. Next slide, please. Yes, these slides, with these slides, I would like to illustrate the situation where the Finnish economy standed when this COVID-19 crisis began. And before this year, the left-hand graph shows we had a quite modest economic upturn that lasted, well, only about 2 years, 2016 and 2017. And before that, we had quite a slow and not so satisfactory economic performance for a long time, and we could even talk about the lost decade in the Finnish economy. The yellow bars show the situation this year and the forecasts for the next 2 years. This year, our economy will shrink about 5%, and compared to many other European countries, this 5% is quite modest, and we have performed quite well so far. The forecasts for the next year and year 2022 are made by the Central Bank, the Bank of Finland, and the Finnish Ministry of Finance. And are those forecasts reliable? I will come back to that point a bit later, but I would like to point you at some facts about the right-hand side graph, which shows us the volume of new orders in manufacturing. And the main point in this graph is the fact that the amount of new orders started to decrease about 18 months before the COVID crisis hit the economy. So the starting point for the Finnish economy to meet the crisis was quite difficult, I would say. The next slide, please. So we had some kind of a lost decade behind us. We didn't perform very well in the sense of economic growth during the last decade. During the first phases of this COVID crisis, we have survived quite well. The second quarter was satisfactory compared to other countries, and also the third quarter will also be quite good. The economy is shrinking, but not as fast as in many other Western countries. And what is important, at least in my mind, is to realize that even the recovery is going on every day, but we will not go back to some kind of normal thing that we had last year or even before. The normal will be something else in the future, and that's a very challenging fact for the SMEs in Finland. And why is it challenging? Because we have learned that productivity and also investment tend to decrease in consequence of whatever economic downturns, and that something like that might happen again. And going back to the forecast for the next year and even the next one, the forecasts will tell us that the Finnish economy could recover quite rapidly, 2.5% next year and a bit less than 2% in 2022. I'm not very sure that those forecasts will realize, and if we could see that kind of recovery, we would not be very satisfied because those growth rates will not compensate the losses that we realized during this year. But however, the Finnish economy has some very, very good points and strengths, and I would like to only point one, and that is the ability to adapt all kind of new technical solutions in both in business and in public services, and those solutions are something that we really need when building a new recovery in our economy. For the economic policy, it's quite clear that the first thing we have to do is to help the SMEs to survive the crisis, and of course we can do it by giving public support to the companies, and we can go on in that way as long as the central government is able to get new loans. But this kind of policy will not build a new sustainable growth, so we need something else, and what we need is for the present government and also for the next government, and they have to create some kind of a new credible long-term plan to build a stable economic environment for the SMEs. And I guess that this kind of plan will include clever regulation, taxation, some renewables in the labor market, and also a very functioning financial sector. And the financial sector, I'm not worried about it. It has performed very well so far, and we have a stable banking sector and other financiers also. But in the other fields of economic policy, there's much more to do. The last slide, please.
Timo, I'll just give you 1 minute, please.
Yep. I will handle it in 1 minute. The main point here is that the SMEs in Finland, they will face a very demanding task to renew their business, because we are not going back to the old economy where we dropped in the beginning of this year. What will help us is the fact that the economy is becoming more and more service-oriented, and that gives, in principle, a new potential for export for the small companies also. And I would like to conclude with the fact that Finvera as an ECA company is becoming very, very important, helping the financial sector to operate and helping the SMEs to survive also in this crisis. Thank you.
Thank you very much, Timo. So to finish with our European tour, we invite Matt Addy, special guest from the British Business Bank from the UK. Matt is Director of Economics at BBB and a graduate of Cambridge University. His responsibilities include leading a team of economists producing high-quality research on small business finance markets and delivering economic input to BBB activities. So Matt, the floor is yours.
Thank you very much, Michel, and hello to all in the audience, and I hope you're all well in these difficult and stressful times. I'll just quickly run through both what's happened in the UK so far and what the sort of near-term outlook looks like for the UK and our SMEs in particular. So first of all, what's been the wide macro impact on the UK? Well, most estimates, whether they be official forecasts, international organisations or private researchers, continue to suggest that the UK economy will shrink by about 10% this year in 2020, pretty much unprecedented for peacetime. In terms of the businesses themselves, we've been lucky to benefit from a regular fortnightly survey by our national statistics body about the extent to which the businesses have been interrupted by COVID-19. In the early stages of the lockdown back in the springtime in the UK, that reported that nearly a quarter of businesses had temporarily closed or ceased operations, and 2/3 of those that remained active had seen a fall in their turnover. So again, an unprecedented impact on businesses. The situation has improved somewhat. By late September, only 2% of businesses were temporarily closed, but still nearly 50% of businesses had turnover that was down on what they would usually expect at that time of year. So some activity returning, but still at a much lower level than normal. There were some positives in that survey. About 10% of businesses actually said that demand had gone up. And I think that highlights the wide variation in impact across sectors and types of businesses. Those in certain sectors and those that could trade online and digitally were doing okay. Those that relied on meeting customers face-to-face in the obvious sectors such as retail, hospitality and so on, where the problems were greatest. And SMEs are disproportionately active in those sectors that have had the biggest impact. So SMEs have suffered more than the average larger business. We see that through the take-up of the various schemes that have been run by the UK government and by the British Business Bank. British Business Bank schemes have seen £62 billion worth of loan guarantees facilitated through those schemes, where a large, or in some cases 100% of the risk is ultimately taken by the UK government and only a small part by the commercial lender that has the relationship with the SME. That 62 billion compares to over 6 months compares to the average annual flow of bank lending to small businesses in the UK of around 55 billion. So more finance has gone out through guarantee schemes in 6 months than goes to SMEs through the banking system in the typical year. It's not only those loan guarantee schemes, we've also had furlough schemes for those workers who've been temporarily laid off and a large part of their wages has been recovered. We've had various grants available and assistance in terms of giving longer for companies to pay taxes and so on and so forth. So there's been a very wide range of measures. Looking forward a little bit, the latest evidence published yesterday, in fact, on small businesses' confidence going forward. And this reflects the fact and picks up on the fact that the second wave of COVID cases is now clearly here, and lockdown restrictions are being reimposed to greater or lesser extents in different parts of the UK. But that showed for recent survey work in September that 66% thought things would get worse again in the next 3 months, where only 34% thought that things would get better. So the second wave is clearly having an impact on forward-looking expectations. What's the impact on that for growth in 2021, this quarter, and then onwards in 2021? Well, before the second wave came, the average forecast for the UK economy amongst the leading forecasters was a recovery of about 7%, which, if the expectation was the fall will be 10% in 2021, it means that by the end of 2021, the UK economy will still be 3% smaller than it was pre-COVID. Obviously, there's a number of drivers of that recovery. Looking into that macro growth forecast, there's been a big shock to the labour market. How long will it take those that become unemployed to get back into work, to find new jobs, or to potentially even start up businesses themselves? In the UK, because of the job furlough schemes which have been running for the last 6 months, a lot of people are sort of still employed but not particularly active, and it'll become clearer sooner how many of those will move into unemployment. There'll obviously be an ongoing impact on consumer demand, both because of the interactions between consumers and businesses because of COVID and the restrictions, but also on people's general willingness to spend. And obviously that all has an impact on investment expectations, which generate long-term impacts on the economy beyond the next 15 months. So with the second wave just rolling through the UK and the restrictions back in force, looking forward, the question really is how much more do we need to do to help businesses survive? That's back on the agenda. And how much do we need to do to help them recover? I'll leave it there. Thank you very much for your time.
Thank you, Matt. So I now suggest that we cross the Atlantic and move to the Americas, and more specifically, starting in South America and Brazil. So I'd like to welcome Fabio Giambiaggi. Fabio joined the Banco Nacional de Desenvolvimento Económico y Social, BNDES, in Brazil in 1984, and is currently chief economist after holding several senior positions and being the advisor to the president. Fabio is a professor and author of several books, including a compendium about contemporary Brazilian economics. So, Fabio, floor is yours from Rio.
Okay, thank you very much. Next slide, please. Okay, the crisis has hit severely the Brazilian economy, but we have seen a recovery in a kind of V, in the sense that the monthly indicator of the GDP, which is released by the central bank, shows that in an accumulated basis between February and April, the GDP collapsed 15%. But since then, beginning smoothly in May and more strongly in June and July, the monthly GDP recovery 2% in May, 5% in June, 4% in July, and 1% in August. So currently, the monthly GDP is around 4% below the level of February, obviously with seasonal adjustment. As you can see in the chart, the shape of the different variables, retail, industry, and services is more or less the same. The second, please. The most important feature that happened in the job market, and this is a cause of worry for the future, is what's happening with unemployment. Not only because, obviously, the unemployment increased, but also because the supply of labor force, what we call the working force, suffered a really incredible reduction from 106 million people before the crisis to 95 million people recently. And this is related basically to the fear of people going to streets to try to find a job in a situation in which there is the risk of having COVID. So the unemployment has increased from 12% before the crisis to 14% now, but this is associated with a restrained level of supply. The big risk is what is going to happen when this huge mass of people go back to the job market in a situation in which initially the level of demand for new jobs is not going to increase too much. So probably you are going to see two waves of increase of unemployment. One, what is happening, and the second is going to happen when, even with an increase of employment, the level of unemployment is going to increase because of the increase of supply of the force. In terms of the big numbers, we are expecting a GDP of having a decline of minus 4.5% this year, with a perspective of recovery in the range between 3 and 3.5% next year. Going to the final slide, please. Next. Yes, thank you. So in terms of what's happening in the field of small and medium companies, we have seen an important change of the profile, in the sense that in the past year, the total credit for companies had a decline of minus 4% in real basis, while the level of increase of the credit to small and medium companies in the past year increased 2%. This year, the credit to companies, because of the necessities of them, increased 15%, a big reduction against the drop of the past year. The level of increase to small and medium companies increased 24%. For the next year, the big doubts, just to finish, are associated to what is going to happen when the government finish the big impact, the fiscal impact of this year. The government gave a support of 600 reais for more than 60 million people. It's a huge amount of money that helped to reduce the level of recession, but on the other hand, increased the level of public debt from 75% this in the past year to a forecast of 95% this year. So naturally, both the government and the public opinion, the pundits are very worried about the future profile of the debt. Probably this is going to be addressed in the next question of the Q&A. Thank you.
Thank you, Fabio. Now we suggest we travel up to Mexico City to welcome Armando Gamboa. Armando is head of financial markets analysis at Nacional Financiera, NAFIN, in Mexico. He's responsible for analyzing macroeconomic scenarios for institutional planning, coordinating financial market analysis and investment strategies in the local financial markets, as well as contributing to the institution's treasury funding strategy. So, Armando, the floor is yours.
Sorry, glad to stay here to talk to share some ideas. Well, let me start talking about the COVID situation, the current COVID situation in Mexico. For now, infected people was near of 900,000, and the death toll is around 90,000 people. Recently, has been confirmed some increase in cases, but deaths have been low and stable until now. The second wave has not arrived yet, but authorities are vigilant to the behavior of the virus of COVID, mainly because we are in the autumn and winter season, and it's always complicated with the seasonal flu. The government has called to people to reinforce the preventive measures that has been relaxed, but because they're returning to the reopening of some activities in the previous months. The returning to a new normality has been driven by a traffic light system, when the state and the municipalities could be since red until green light. When the light is red, only the essential activities are allowed, with restrictions of access and capacity. And when the red is the light is green, all activities are allowed, but respecting the sanitary measures. For now, most of the states and municipalities are in orange light. And related to the GDP, after a deep fall in the second quarter of 17%, we are expecting that in the next quarters, the 3 and the 4 quarters, the economy grew we grew by 12% and 2% respectively. And for world 2020, the economy will fall around 9%. And for the next 2 years, the recovery expectations are slow, 4% in 2021 and 5% in 2022. Next, please. in the case of employment, more than 7 million jobs were lost in the period between April and September. We are talking about full-time employees, employees, and that for now, around 3 million of that are working less than 2 hours a week, and the rest, around 800,000 are were jobs in the formal sector, and the rest, around 3.5 million, were jobs lost in the informal sector. Annual inflation was 4% in September, and it is to say that this is above the upper limit of the central bank target, that is 2%, plus minus 1 percentage point. And it was caused because the increase in food prices and traded goods too, that was related with the depreciation of the exchange rate and the increasing demand of food during the lockdown. Monetary policy has been relaxed, but since the key rate descend from 7.25% to 4.25% in September. In September, and it's expected that the central bank cut another 25 basis points between November and March of the next year. The exchange rate has been depreciated. Our peso has depreciated about 9.30% in the period. Along the year, and it's expected that it maintained around 22 pesos by dollar for the next year and the end of this year.
Armando, sorry, if I may ask, 1 minute, please. Thank you.
Yes. Okay. External, we have suffered a withdrawal of $15 billion from the government debt market during the year, but the other side, the remittances have increased 88.8% this year. That is a historical record. And without doubt, the serious consequence of the pandemic was the increase in poverty. Different studies estimate that in Mexico, around 10 million people will fall below the poverty line this year. And the last, please. And there are the main challenges that we are that we believe that the SMEs are facing by now, and I can resume it that they need to survive and maintain on business mainly before the thing increase his capacities. And who are facing them? We are by two ways: financial offerings and non-financial offerings offered by the bank. Thank you.
Muchas gracias, Armando. So I would now like to move for the last country, Canada. I'd like to invite Pierre Leroux. Pierre is Vice President Research and Chief Economist at the Business Development Bank of Canada, or BDC. Pierre leads a team of experts who analyze economic data to identify business and sector trends impacting Canadian entrepreneurs. So Pierre, the floor is yours.
Thank you, Michel. If we can move to the slides, please. The situation in Canada, you can see, we can summarize the situation in Canada with the slide that you see. So this is the level of employment compared to the pre-crisis level. So during the lockdown in the spring, you can see that the level of job dropped significantly. Actually, the Canadian economy lost 3 million jobs. but since the economy has reopened, we have recuperated about 76% of these jobs. So today we are at 96% the level of job of February. In some sectors of the economy, like manufacturing, retail, finance, real estate, technology, we are back to 100%, which is a good news. However, in some sectors, mostly related to tourism, the level of jobs is still below because of the restriction imposed by COVID-19. Our border is still closed. So the initial recovery, as you can see, we are at 96% of the level of jobs has been strong, stronger than what we expected at the beginning. And we like to compare ourselves to the United States because it's our #1 trade partner. So it's also stronger. The recovery in Canada so far has been stronger than the United States. However, we are not 100%, and we are in the middle of the second wave right now. So the last part of the recovery is going to be slower, at a slower pace. So we think it's going to take another year or so to go back to the pre-crisis level. We expect that the Canadian economy is going to be back to the pre-crisis level somewhere at the beginning of 2022 or in the middle of 2022. So we still, as you can see, we still have a long way to go to totally go back to normal. We'll go to the next slide. One of the reasons why the initial recovery has been strong in Canada is the contribution from the Canadian government. The Canadian government has put together a number of programs to help Canadians and also Canadian businesses. On the people side, the transfer to people has been very significant. As a result, the disposable income in Canada has increased over the last few months. So on one hand, some Canadians lost their job or lost revenue because they're not working as much. On the other hand, the transfer from the Canadian government has been significant, and that increased their disposable income. So the bottom line is most Canadians, the total revenue for Canadians is actually higher today. So that's explaining why the initial recovery has been strong. On the business side, the government has introduced a number of programs. The most popular one is the wage subsidy. So it's helping Canadian companies to rehire people, and that's really been popular. But there's a large number of programs, and for example, BDC has introduced a number of loan programs to help Canadian companies. The next slide, please. So Timo was talking a bit earlier that in Finland, that the economy won't be the same after this pandemic. That's exactly what we believe for Canada. We did the research last summer on consumer, and we believe we understand consumers are going to change their behavior, which is going to change the business environment for SMEs in Canada. So many Canadians are really cautious financially. Saving rates in Canada is increasing, which is going to delay the full recovery. Second, the online business is exploding. The pandemic has really accelerated this trend. So this is significant. This is important to understand for small business because more and more the retail sales is going online. Third, Canadians they want to buy local products or at least from local companies. That's a new trend. They want to have a positive impact on their community. So that's the reason for that. So that's another trend that is important to understand for business. And finally, Canadians are really cautious about their health. So that's also important for business to understand. So the last slide that is presenting business investment in Canada. We keep track of business investment intention every quarter. It's a balance of opinions. So when it's positive, it means that business investment are increasing. So in January, at the beginning of this year, situation was quite positive. We expected more business investment this year, but of course, everything changed in April. As you can see from the numbers, the business investment are going to decline this year. This is important for the economy. 20% of the GDP in Canada is business investment. The only bright side of this is entrepreneurs. 25% of entrepreneurs plan to invest more in new technology. So despite the fact that business investment are going down this year, they're going to decline, while entrepreneurs are spending more money in technology to become more efficient, to reduce their costs, to have a higher presence online, and also to encourage teleworking. So this is probably the only bright light that we see right now in terms of business investment. So in conclusion, the initial recovery in Canada has been stronger than what we expected. However, the second wave is going to delay the full recovery. So we're still in the middle of it, but we hope that the government won't have to go back to a lockdown situation. But there's no doubt that the second wave is going to delay the full recovery. Thank you.
Merci, Pierre. Thank you. And thank you all to our speakers. I don't know if people realize, but we just did a global world tour in just an hour. This is the beauty of virtual events. So again, the reminder, if you want to submit questions, you can use the chat functions. We've received many questions from the audience, so I will just go through them, not choosing any particular order. And I would ask the speakers, I will ask for volunteers on some of those questions. If we want to be able to go through most of the questions, please keep your remarks to less than a minute. So the first one, and again, this is a general question to all of our speakers. Given the challenging economic environment highlighted by all presenters, which sectors do the chief economists see as growth sectors over the coming months? If I can ask maybe two volunteers from our panel to just talk about growth sectors in their country. Do I have a volunteer? Pierre?
Sure.
So Pierre Pierrot first, and then Pierre Léonard. We'll go with the two Pierres.
Two Pierres. Well, in Canada at least, and I think it's going to be the same around the world, the technology sector is really performing better than other sectors for two reasons. First, they can work from home, so they don't have the restriction because of the pandemic. Also, what we see, there's a momentum in terms of technology investment. So the demand for this sector is strong. So in Canada, at least, it's going to be the fastest growing sector.
Thank you, Pierre. Pierre Léonard, you wanted to jump in?
For Belgium, the biopharma sector is particularly involved and impacted by the crisis, and it was considered as an essential sector, and it continued to develop during the crisis, and now it is an actor of the solution for the end of this crisis by developing vaccine and new drugs.
Okay. Thank you, Pierre. So another question, a lot of SMEs in our respective countries have benefited from capital postponement or moratoriums that will come to an end shortly. However, we're experiencing the second wave of COVID-19. So are these SMEs going to be able to start paying their loans? And will the pandemic create over-indebted SMEs? So if I may have two volunteers for this one. And we see, Baptiste, go ahead.
Yeah, I can say a few words for France. Well, like I said in the short presentation, part of the response to help SMEs manage the first stage of the crisis has been to offer them some loans to secure cash during the lockdown. So it has been a success so far, but still it represents a huge amount of debt that will need to be repaid in the coming years. So far, we let's say a few weeks ago we were not that worried, because when we survey SMEs, a lot of them kept this cash as a savings. So very, very few SMEs expected difficulties to reimburse this loan. But of course, it will all come down to the length of the crisis and how we will able to handle this second wave. So there will be a lot of uncertainty and maybe the need of an extension of this kind of programs. And so we will need to monitor closely this situation, and that will be one of the big challenges coming in the next quarters for sure.
Any other volunteer?
I'm happy to.
Sorry, Mr. Foucault.
Okay. Also, Jersey made a payment moratorium for SMEs when we make a loan, make special loans about 1 or 2 years. And Jersey is also fearing about that they cannot pay the back payment. But if the situation, COVID-19 situation, will be continuing, in such case, Jersey will reschedule the loan payment for SMEs, as Jersey did for the another special loan programs in past. Okay, thank you.
Thank you. So one thing, if I may share a Canadian experience, as we saw the economic impact was dramatic for many sectors. In fact, a large portion of the economy. What we are observing in the case of BDC is a large proportion of our clients will now be able to resume payments, but there is a small percentage, and these are the industries that are most impacted, such as tourism, the airline industry, and so forth. And those people obviously are more at risk, especially as the second wave is hitting us. Another question, as it pertains to international trade, which sectors are most stable at present and over the coming months? So do I have a volunteer to answer this one? What's happening as it relates to kind of export performance and export flows in your respective countries? It's a tough one. Okay, well, I'll flip it the other way around then. Many of us are dependent on imports for food consumption. We've seen in some of your presentation some inflation as it relates to food prices. So can you help us understand exactly what the impact has been on your respective economy? Joseph?
Thank you, Michel. The Nigerian situation is rather peculiar because we have actually banned the importation of some staple food items. Also, there's significant flooding in a lot of states. There's also irrigation challenges as well. Consequently, there were going to be lower yields this harvest period as a result, and of course, cost of goods manufactured or produced because of the power situation in Nigeria causes an uptick in food inflation. So we've actually seen a dramatic rise in food inflation. Currently, right now, food inflation is at 16.6% and has been dramatically climbing since then. So what we're anticipating this harvest period and this seasonality of prices, because we're going into the Christmas season, the situation is only going to get worse. That's the reality of the day. But I think going into next year, though, we'll see it gradually come down simply because we'll have more, I guess, broadly speaking, we'll also have more ways of managing the irrigation system, as well as curtailing the situation when it comes to importation of foods such as rice and so on and so forth. Thank you.
Thank you, Joseph. So another question, is there a consensus on, and this one is difficult, is there a consensus on what percentage of SMEs will permanently close as a result of COVID-19? So any views as to what percentage of your firms may ultimately disappear as a result of the pandemic? Pierre-Léonard? And Matt afterwards? Yeah, sorry, you're on mute.
In 2020, bankruptcy figures are lower at now, but it's an improved vision that takes into account the business protection measure. But a Belgian credit insurer indicates that 12,800 companies would cease to exist in Belgium in 2020, so thus 20% more than in 2019. And it's like the same percentage in France predicted by Ecofes, 21%, Spain 22%. less and lower than United Kingdom, 37%, Italy 37%, Netherlands 36%, and the lowest growth of bankruptcy, we can speak of growth of bankruptcy, it's in Germany with an increase of 12%.
Thank you, Pierre. Matt, over to you.
I think it's too early to produce that sort of estimate, particularly whilst a lot of the support schemes are still in place. And we'll only really begin to get a sense of what happens when those support schemes come to an end. And even then, for example, in the UK, we've got some options on our loan guarantee schemes to extend repayment periods and so on. But I think it's important to remember that when we think about our SMEs in particular, they are a dynamic population that churns quite a lot. You know, the average SME has started, lived and died within 3 years. In the UK, after about 3 years, about 50% have gone. So it's a hugely dynamic population. So I don't think we should be sitting there looking, getting too concerned about this in the medium to long term, because we have relatively dynamic populations. There will be more startups. There will be recovery. It's how we get through the short term and the medium term. I think, if we're looking at how many SMEs aren't around in 3 years' time, it would be quite a lot would have gone naturally. It's the difference that's been made by COVID-19. And I expect in the long run, it won't be as great an impact as we fear, but the short run costs could be pretty high.
Okay, thank you, Matt. So interesting phenomenon as we see the impact or the casualties on the SME front will take some months to materialize. On the other hand, interesting statistics, we're starting to see a bit of an uptick around business creation as many people are creating their own jobs through business creation, or will be basically filling the space left by those businesses that unfortunately will disappear. Another question, this one for Baptiste. Could you share the results of the sondage, the BP France Rexeco to Montreal Group? Is this something that is publicly available?
Of course, we have a quarterly SME survey in France. So in my presentation, I gave you a short look on the kind of results we have. Regarding the last question, we actually ask SMEs who would see likely a failure in the coming months, and so far there are very few, less than 4%. But that was the situation in early September after a pretty good summer. And of course, we need to see what's the situation now. We are running the next survey at this present moment, and we'll have the results in the coming days. So we'll see what comes out of this actualization of SME view on the expectation. So,
merci, Baptiste. So we have a question. Many development institutions have deployed credit guarantee schemes to help with SMEs' challenges addressing the pandemic. I'm just curious, from your experience in implementing those schemes, what has worked well or what has not worked so well, given now what we know about the pandemic? So do we have any volunteers who wants to share? Abdel, go ahead.
Thank you. So about us, we are mainly a credit guarantee institution. And during this crisis, so what we witnessed is that first, due to the initial shock, so the banks were reluctant to continue granting loans and extending loans to SMEs. So this is why we developed the new products with exceptional credit guarantee coverage. For example, for very small companies, we offered 95%, and for larger companies, we adopted 80% compared to our general ordinary guarantee coverage, which is between 50 and 70%, depending on the product. So about what worked well is that we have we relied on our process for SMEs to delegate to banks. So we eliminate, for example, any for very small tickets, we eliminated any control at our level by our committees and analysts, except for the IT system to make sure that each SME is able to get this special guarantee only once to avoid over-exploitation. Otherwise, anything was delegated. Also, we have simplified the products during the time and given the feedback of SMEs and banks. Maybe some ratios, some conditions that can work well in during ordinary or normal situation could be complex to implement or to make sure that is respected during this special crisis period. So this is why we try to simplify the maximum and eliminate any paperwork. We asked the bank just to send us the minimum information to make sure that we will be able to identify the SMEs, and also to check at the credit bureau, for example, if they have any special maybe default on anything like that could prevent them from getting these guarantees. Otherwise, maybe the key is simplify and eliminate any cumbersome approach to make sure that the circuit is between the SME and bank in most of the time.
Thank you. So many of you alluded to the fact that as a result of the pandemic, there's been an increase in consumer spending, purchasing online. So I'll just do two quick polls. Just raise your hand if the answer is yes. But in your country, has consumer purchasing online increased in an important fashion over the last 6 months? Just raise your hand if it happened. Thank you. And second poll question is, do you people think that this will last and will be a long-term changing behavior? We have a few hands as well. And thirdly, many of you, as part of support measures, have been deploying kind of helping SMEs that migrate to selling more or having a stronger digital presence. Anybody wants to share the rationale behind and some of the measures they've implemented on this? Do I have a volunteer just to, Joseph?
Sure. Thanks, Michelle. So what the DBN has actually done in recent years since our activities have started was to actually leverage on partnerships. So whether it's with small consulting firms or big ones, the idea is to leverage on partnerships like International Trade Center for B2B types of arrangements or for capacity building arrangements, because in the end, the objective is to help them survive and ultimately thrive post the pandemic. I think, sincerely speaking, because unlending could become a challenge, capacity building has been seen as a tool to ensure that businesses, especially the micro businesses in Nigeria, which is basically 95% of them, can actually have the knowledge to defend viable business plans and, generally speaking, grow their various businesses. And basically what we've actually seen throughout the past few years of operations. Thank you.
Thank you, Joseph. So we have time for one last quick question. And this one is not easy, but what, as development banks, would you have done differently given what you know now, 6-7 months into the crisis? Anybody wants to share some of the lessons learned through this crisis? We need some volunteers. It's a tough one. So I don't have a taker on this one. Okay, I think let me see. Will the recovery be affected by supply chain management due to increased protectionism in some countries? So what's happening as it relates to kind of global supply chains and the impact of the pandemic on that? Do I have a volunteer for this one? Yeah? Cléo?
Yes, thank you. At the beginning of the pandemic, like in March and April, we were really concerned about supply chain around the world, but so far we haven't seen too much disruption as the world economy has reopened. China has been really good to come back to the pre-crisis level in terms of the manufacturing sector. So when we do survey with businesses, this is not a big concern. Is that they have a lot of concern about demand, about financing, about other things. But on the supply side, they don't have a lot of concern about that now.
Okay. Thank you, Pierre. So unfortunately, this is now time to wrap up the webinar. So first of all, I want to thank all the panelists for joining us today and providing the insights that you've done. I want to thank the audience for joining us today. We had a very global audience. I hope people appreciate it. As mentioned initially, this pandemic is not something that we had experienced before. So it is representing a challenge on the medical front, but also, I must say, on the economic front. And a forum such as the Montreal Group, I think, provides a great platform so that we can mutually learn from each other and advance the science more specifically as it relates to how to help our SMEs cope with this pandemic. So I'd like to, again, thank you all for your time and attention this morning, this afternoon, or this evening. And I will now pass it back to Sandra for the closing remarks. Thank you.
Merci, Michel. Thank you very much. As you said, it's the first time that we have such a large global roundtable, and I think Mabel and Marie-Tere, we've been texting and writing. We're pretty amazed about how we end sharp, and everyone was able, more or less, to keep time within what was set for. So thank you very much for respecting the agenda. One last note is we have received tons of questions. I think Mabel, Marie-Tere, I think there's probably 15 plus questions we weren't able to answer. And as promised, we will get back to you. As I mentioned when we first started, this roundtable of chief economists is meeting regularly. So I'll make sure that we circulate the questions among the, at the next time we meet and perhaps before. So maybe you'll receive an answer from one of our chief economists directly to the question you asked. So thank you so much. Merci beaucoup. I'd like to say thank you in all the languages, but I think we are running out of time here. So merci. Have a great day or a good night for the other side of the planet. Thank you. Au revoir.
Thank you. Bye-bye.
Goodbye.
Bye.
Thank you. Have a nice day.
Thank you very much.
Thank you. Au revoir. Au revoir.
Thank you. Bye.